from Bloomberg's World Headquarters in New York, I'm Scarlett Fu.
And I'm Tim Stenevec. Welcome to the new one-hour edition of Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance.
Here's what's at stake today. Bitcoin, like the groundhog, is seeing a crypto winter. The digital asset continues its sell-off to start 2026.
In just a moment, we're going to speak about this volatility and his company's recent earnings. Mike Novogratz is joining us. He's founder and CEO of Galaxy Digital.
Plus, we will speak with Summer Mersinger. She is CEO of the Blockchain Association and former commissioner at the CFTC. She was in the room for Monday's big White House meeting as all sides look to hammer out the crypto market structure bill.
That's all ahead on this one-hour edition of Bloomberg Crypto. First, though, let's just see where things stand to start the year off. Bitcoin having a rough start to the year, down close to 13% so far this year. You actually look back to Sunday right here. You can see that Bitcoin fell to its lowest going back to November 7th of 2024. You know what? Scratch that. Now we're even further below than that at 76,382. Back then, there was a lot of optimism in November of 2024. President Trump had just won the election. Hopes were high for what Bitcoin would do. Sentiment, though, right now, not improving because analysts are warning that without a fresh catalyst or narrative to reignite interest, sentiment, Scarlett, becomes self-defeating.
All right, let's zoom out as well, because this negative sentiment has really been the case since the start of the fourth quarter. Bitcoin is down more than 35%, almost 40% from its peak back in October. Of course, drawdowns of this magnitude, not exactly uncommon for Bitcoin, but this time around, it has failed to respond to typical drivers like U.S. dollar weakness or geopolitical risk. And on top of that, Bitcoin is decoupling from other assets, leaving it increasingly directionless and almost just kind of drifting, Tim.
We're going to have much more on this throughout the program today. I want to kick things off now, taking a look at shares of Galaxy Digital. It's seeing its stock under pressure to start this week. Shares down right now by about 15%. This comes as the company posted a loss of almost $500 million during the crypto market's fourth quarter crash, with trading volumes down 40% compared to the prior quarter. Joining us now for an exclusive interview is Galaxy Digital founder and CEO Mike Novogratz. Mike, good to see you this morning. Thanks for joining us, especially on earnings day. You're fresh off the conference call this morning, and you said that, quote, pain is part of the ethos of this whole industry.
Unfortunately, that's true.
How much more pain is ahead?
Listen, you never actually know where markets bottom, right? Crypto, when Bitcoin went through 100,000, that was a major level it broke down on. And so, you know, when I look at the chart, 70 to 100 is probably the new range. And, you know, we're at 76. So I think we're towards the bottom end of the range. There's a lot of pessimism out there. A lot of leverage has been taken out of the system. Bitcoin was not supposed to act like this, right? You had gold prices higher, the NASDAQ higher, rates going lower. This was the Trump administration was very pro-crypto. And so, you know, something went wrong. You know, the crypto market is still less than 20 years old, right? Right, I think Bitcoin 09, so we're 16 years old. And it's immature. We had a huge run up. From, you know, where people bought it at 50, 100, 1,000, 2,000, 10,000, all the way to 100, 130,000. And I think what ended up happening was people finally started taking profits. After we crossed 100, it felt like the community had won. And it was that sigh of relief, like we did it. We created this amazing ecosystem, this amazing asset. And there's been kind of like a seller's virus that got into the market. People blamed it on quantum. I don't think quantum in the long run is really the reason. I think there was selling, and that selling is getting, you know, executed in the market. There was buying, sure, lots of new institutions are coming in, but prices are set on the margin, and there have been more sellers than buyers. I think we're getting close to the bottom, but we'll see. You always know a bottom after you see it. Yeah. And listen, there's a couple things that could help, right? Market structure bill passing would be a big deal. You know, people are really pessimistic on it right now. Okay. I actually am a little more optimistic that things get done because I think both sides want it done, but we'll see.
So what is the catalyst that turns the tide right now? You mentioned a market structure bill. Maybe that will bring some optimism, but I don't know. Is there anything else that could turn around this trade?
Yeah, listen, part of this acceleration recently downwards is the thought that Kevin Warsh is going to be very hawkish. Listen, what I think Kevin did is he took out the tail risks for inflation, right? He's a man of integrity. He has worked alongside Stan Druckenmiller for a long time, literally since he left the Fed. And so you don't think he's going to do whatever Trump wants him to do. That said, he's pretty dovish right now. And I think once he gets in and starts talking, looking at the environment that we see today, he wants rates lower. And I think once that market kind of rewrites him as a dove, at least a dove, given the current environment, that also could help. There's probably been an overreaction on how hawkish he's going to be. But I do think, listen, he took out the tail risk, which is a good thing for America and not necessarily a good thing for gold, silver, or Bitcoin.
I appreciate you making the connection back to the macro environment overall. I'm curious, with this softness that we're seeing in crypto, in Bitcoin, how does that change what Galaxy is doing? Do you still plan to launch this $100 million hedge fund, crypto hedge fund in the first quarter that will bet on rising and falling prices? Does it change your timeline, how you're thinking about it?
Yeah, the great thing about this hedge fund is it's really a fintech fund, and it's the broader ecosystem. So I said on our call, this is a tale of two cities, or really three cities, because we have this data center business, which is booming. Thank God. If I didn't have the data center business, I'd feel a lot worse. But our data center business is now, worth more than our crypto business. But within crypto, there's still a bull market, and there's a bull market in infrastructure, right? The traditional banks and finance companies are moving into this space quickly, and we're seeing lots of opportunities to partner with them around building wallets, around staking, and around really thinking about how tokenized real world assets, move into the world. And so I think I haven't seen more excitement since I started from the traditional players to get engaged in digital assets. And we've got the old version of crypto, the tokens that exist today, that just don't seem to have the same support, the same appreciation, the same energy in them right now. And so some of that energy is shifted, and you see things like, perpetual swaps on equities booming all of a sudden. So using the crypto infrastructure for real world assets, the crypto leverage system for real world assets. And so that part of the business is really exciting. We're leaning into it, both in hiring and more, and utilizing our engineering team to help others get in this game. The other part is moving things more on chain, and that is happening quickly.
Right.
And so you're going to see credit on chain, and you already see the boom of stable coins. I mean, you look at the volume of stable coins in the first month of the year, it's explosive. And so we are moving into a digital world, and it's going to run on crypto, blockchain rails.
Yeah.
That's just not correlating with the price of Bitcoin, the price of Ethereum, the price of Solana, Ripple, you name it.
So, Mike, with this excitement with the data center business, would you consider a spinoff to separate your crypto and AI data center businesses? Would you be open, perhaps, to selling your data center unit to any of the hyperscalers should they come knocking on the door?
Listen, we're in the build mode on the data center business. We just got 530 megawatts of power approved down in Texas. That's probably the largest new power approval in the United States for a while. And so I couldn't be more excited about that. We're engaging now with, potential tenants. You can guess who they are. And so I think we're going to run this data center business, and we're going to grow this data center business ourselves. The capital structure at Galaxy is something we think about a lot. And I said before, if A plus B is a bigger number than A plus B, we should stay together. And if it looks like we're getting penalized, we'll figure a way to maximize shareholder value. And so right now, in this short term, our stock seems to trade, very cheap relative to what I think the data center business is worth alone, let alone the value of our book and our crypto business. And so, we're certainly looking at it.
Hey, Mike, very briefly, and then we're going to do some news and come back to you in just a few minutes. You've seen a lot of cycles. You have the tattoos to prove it. Are we in a crypto winter right now?
Yeah, listen, I mean, we were at 100, 30,000 and we're now at 76,000. And so that is what a 45 odd percent drop. If I did my math right, or maybe it's 40% drop. That's way through bear market, and that feels awfully chilly. My question is, when is spring coming? And I think we're closer to spring than we are to the start of winter.
All right, we're going to leave it there. We're going to do some news. We're going to come back with Mike Novogratz. He's staying with us. We're going to talk about all the legislation and regulation being discussed right now in Washington, D.C. Also coming up, Atlas Capital founder Bob Diamond talks about the double-edged sword of digital asset treasuries. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg. It's time now for The Odds, where we take a closer look at prediction markets. New rules are coming for the multi-billion-dollar industry. That's according to CFTC Chairman Michael Selig. He said last week, quote, "It's time for clear rules and a clear understanding that the CFTC supports lawful innovation in these markets. Consistent with my commitment to fostering responsible innovation in crypto asset markets, I will continue to support the responsible development of event contract markets."
All right, let's bring back Galaxy Digital founder and CEO Mike Novogratz, who remains with us for this exclusive conversation. Big picture, when it comes to any kind of regulation, when it comes to crypto, is what's going on with the crypto market structure bill. And the big sticking point at this moment is whether crypto companies can give some reward points or yield on stablecoin balances. You've said that the crypto industry is going to lose the battle against the banking lobby on this. Why is that, Mike?
Listen, there are a lot of banks. They've done this a long time. They're good at lobbying. They have community banks, their cousins, their poor cousins, very poor cousins in every district of every congressman. And the community banks are being used very effectively to say, oh my goodness, we're going to have this terrible deposit flight and then we'll not be able to give credit. It's not a real story, but
Why not?
It's working because listen, if people wanted to take their money out of community banks, they could have put it into Galaxy's 8% offering or SoFi's. There are so many neobanks, and yet deposit flight is slow, right? Deposits in general are sticky. And so over time, yes, there would be deposit flight, but there should be, because in most of those banks, including JP Morgan, Wells Fargo, you name it, Chase, Citibank, you put your money in your savings account and they pay you nothing. And they make a whole lot of money leaving it at the Fed at 3.5% or 4%. And so it is terrible for the consumer. It's ironic that Washington, both Democrats and Republicans, are saying, hey, let's side with big banks and not the consumers, not our constituents. But that's exactly what's happening. And so Brian Armstrong and the stablecoin issuers who are saying, hey, we want to actually have an innovative, security that allows us to pass on some of that interest to our customers through rewards, or actually in the perfect way, it would be through direct interest. Mm-hmm. But, banks are strong in the lobby, and they're, I do think a deal gets done somewhere in between, but right now both sides are kind of at a Mexican standoff. Why do I think a deal still gets done? Like, the Republican senators have put a lot of time in this and have a lot at stake, right?
Yeah.
Trump is the quote crypto president. You've got the House and the Senate. You better be able to pass a crypto bill, or you look pretty weak.
Give us your view on when you think that market structure bill will pass.
And the Democrats have the same, the Democrats don't want the crypto pack, which just came out and said we've got $190 million of a bazooka ready to shoot at people that stand in the way of crypto. And so the Dems just want to pass this thing and have crypto off the table in politics. It never should have been political. It always should have been a bipartisan issue. Elizabeth Warren made it political.
Okay.
Gary Gensler made it political.
Well,
and so, listen, I think this is, 2 weeks, it's 6 weeks. And I think my hope is we have something done.
Okay. I want to get your take on prediction markets as well. The CFTC chairman, Michael Selig, clearly talking about the need to come up with some kind of rules of the road for this part of the market. It's growing very, very quickly. And I'm wondering from where you sit, what is the single most important legislation or rule that needs to be put forth on prediction markets?
You know, it's a good question. I think the industry, not the prediction market industry, but the sports betting industry, the gambling industry, got caught off guard that the CFTC basically said, "Hey, this is a new form of security, or a new form of a new form of a platform for people to use as a hedging to make bets on," and they allowed it, right? And so since then, there has been a furious lobbying effort by the casinos and the sports betting places to say that's not fair. We have all this compliance we need to do, and these guys don't. And so I'm guessing the CFTC is trying to thread the needle to keep the existing world happy to a degree, and not have to go back on this new industry, which is innovative as can be, which is growing, which has captured the imagination of not just the retail users of it, but somebody like ICE, right? Jeff Sprecher put $2 billion into Polymarket.
Yeah.
And so, I mean, this is another battle of incumbents trying to protect their turf against an innovative, new upstart. Yes.
Well, our colleague Emily Nicole reported back in November that Galaxy Digital is experimenting in prediction markets, discussions with Polymarket and Kalshi. What's the latest there?
You know, again, we didn't invest in those guys way back. I wish I had. I had the opportunity to, and you know, I quite frankly wasn't convinced that without sports bet, you weren't allowed to do politics back then. Sports betting seemed off the table, and so I didn't see where the TAM was. And you know, these guys proved me wrong, and the CFTC gave them the pass. And so if you look at prediction markets, most of the volume happens around sports betting. And so, you know, there are not that many things you want to bet on every day, but sports happen. They have their defined outcomes, right? Politics, which again was illegal for U.S. investors to bet on politics. And, you know, you had the whole raid of Polymarket. You know, this is a new regime. It's a new administration with a very different view. And so, so what could we do? We want to look at infrastructure. We want to be market makers. We want to, you know, be providers of liquidity, and we're just getting started.
Other trading firms, Mike, have also considered getting involved in prediction markets like jump trading or sports betting. AQR Capital Management has talked about sports betting. How do you see this competitive landscape developing over the next year?
Yeah, listen, I mean, if you think about sports betting, you've got, you know, Susquehanna's been a giant in it. These high frequency traders with huge technology budgets they'll trade anything that moves, and they're good at it. And so I think there will be lots of liquidity provided from that same group of people that provide liquidity in same day options and in that market making everything. And so if retail comes, there will be plenty of institutions to pick up their pennies and nickels.
Mike, got to leave it there. Always love it when you join us on Bloomberg Crypto. Thanks so much for taking the time, especially on earnings day. That's Galaxy Digital's Mike Novogratz joining us from New York. Well, coming up, introducing Define. We're going to break down some of the most important and trending concepts in the world of decentralized finance, and we're going to start with meme coins. This is Bloomberg Crypto.
We're halfway through the trading day in New York. I'm Norma Linda. Let's take a look at our midday movers. First up, Walt Disney said Josh D'Amaro, a 28-year Disney vet and head of Disney's theme parks, cruises, and consumer products division, will succeed Bob Iger as CEO of the company. Iger will stay on the board and serve as a senior advisor until his retirement on December 31st. Disney chairman James Gorman shared his thoughts on the new appointment. Take a listen.
He's a fantastic executive. He's strategic. He's run a huge operations, one which Disney is now investing $60 billion of capital into. He has great creative instincts. He has what Bob Iger calls exceptional taste.
That was Walt Disney Company Chairman James Gorman. Also, another CEO announcement over at PayPal. Shares are tumbling for double-digit losses after the payment firm announced that HP's CEO Enrique Lores will replace CEO Alex Chriss, whose turnaround plan has failed to meet targets. The company's fourth quarter profit and revenue also missed analyst expectations. The stock is down more than 25% so far this year. And finally, Novo Nordisk shares are sinking after the drug maker said its sales will drop by 5 to 13% this year, as its blockbuster weight loss drugs Ozempic and Wegovy faced even tougher competition. Analysts had expected a decline of 1.4%. The U.S. government's push to cut drug prices is also weighing on the firm. The company will start a new stock buyback worth as much as 15 billion Danish kroner. Those are your midday movers. Now back to Bloomberg Crypto.
It is now time for Defined, where we explain some of the jargon often used in decentralized finance. And today we are talking meme coins. These cryptocurrencies started as online jokes or social experiments created to grab attention and go viral rather than serve any true practical purpose. Dogecoin is widely considered the OG and most valuable meme coin. It launched in 2013, inspired by a popular meme featuring a Shiba Inu dog. Because meme coins have no underlying assets or cash flows, and as of now, no clear utility, their value is simply what people are willing to pay for them. In January 2025, the total market value of all meme coins topped $100 billion. But that has fallen dramatically over the past year and now sits at around $34 billion. President Trump has also leaned into the meme coin economy, using NFTs and crypto-themed branding to energize supporters and monetize attention. His Trump coin briefly surged to a market value of $15 billion just before his inauguration. There was a similar spike in a meme coin named after the First Lady. But sentiment can turn very quickly. The Market Vector's meme coin index has tumbled around 70% since 2021. What's become clear is that meme coins are not a measurement of innovation. What they do measure, what they reflect, however, is speculative fervor. Tim?
That was awesome, Scarlett. Up next, we're going to be speaking with Bob Diamond. He's joining us on the risks and the rewards we're seeing from the digital asset treasury strategy. That's coming up next on Bloomberg Crypto. This is Bloomberg.
Welcome back to Bloomberg Crypto. I'm Scarlett Fu alongside Tim Stedovic.
Well, it's been a historic year for the crypto industry, the new laws on the books, and a new administration that's welcoming the industry with open arms. We've been covering all that right here on Bloomberg Crypto. And here's a look at what some of our recent guests have had to say.
So I think you're seeing more and more signals of institutional adoption. You're seeing really a whole crypto economy.
I just attended a crypto conference last week. Yep. Is that you are suddenly have the traditional financial people who are showing up to these things.
For the last 4 years at least, we've been facing kind of a regulatory uncertainty.
I realized that there was nothing that couldn't be done in crypto better, faster, cheaper, more transparently, and it's an amazing industry.
We've built the most transparency, the most liquidity, and by the way, we've also brought that liquidity at scale to major banking systems around the world.
The holders of stablecoin will have an entree into the DeFi ecosystem.
Too many giveaways to TradFi, if I can say that. Our view is that there should be a level playing field for this is allowed, this is not allowed, and then all the U.S. companies compete. And banks didn't like that.
Crypto is still a little bit of the Wild West.
I just think the world of crypto has become a more overvalued with the DATs and the companies that have been going public.
There are too many digital asset treasury companies today with no differentiation. And that's why you're seeing a lot of them trade below the value of the Bitcoin themselves.
And that leads us to the intersection of TradFi and DeFi. Last year, Atlas Merchant Capital sponsored an $888 million merger involving Sonnet Therapeutics to create hyper-liquid strategies. a digital asset treasury company centered on the Hype token. For more on this, we're joined by Bob Diamond. Bob is the current CEO of Atlas Merchant Capital. He is the former CEO of Barclays. Bob, thanks so much for coming in on our 1 hour launch of Bloomberg Crypto. I want to start big picture before we get into Hyperliquid. How would you characterize the current environment for risk, given how much sentiment and momentum on crypto has really shifted since last October?
Well, I think over the last week or two, we've certainly seen deleveraging and probably a little bit of a risk-off trade. I think it's one of the reasons why we're so excited about Hyperliquid, which I always try and simplify things a little bit, Scarlett, but if you think about Bitcoin and the volatility of Bitcoin, it's really a store of value, and the price is really much more about supply and demand. It can be quite volatile. Where Hyperliquid is a layer 1 blockchain. It's a blockchain that was built for exchanges to be on top of it and execute on top of it. And I think of Hype, the native token, as more similar to equity in a company. So it's much more valued based on the price earnings, based on the volumes. And as we see Hype be traded on Hyperliquid, but now Trade XYZ, which is a platform, a part of Unit, through HIP-3, they're able to go in on Hyperliquid and build an exchange, and they're trading the NASDAQ. They're trading SpaceX. They're trading Tesla. And just recently, they've been trading silver and gold, metals. So we're seeing for the first time real application of real-world assets coming onto an exchange. And I think this is a sea change. But the volatility we've seen in things that are supply and demand driven, stores of value, is very, very different than Hyperliquid, which is really a business.
We've heard a lot in recent years about the idea of real world assets being tokenized in trading. But I think there are still a lot of people out there who are unconvinced that this is a problem that needs solving. Convince them right now.
Well, silver has been trading on Hyperliquid for about 2 or 3 weeks. Last Friday was the single largest day for volume of silver trading, I think as far back as you can go in history. And Trade XYZ on Hyperliquid was 2% of the volume. I think if nothing can say, we actually have real world assets on this exchange. Hyperliquid is doing it. Now, over the last 7 days, Bitcoin's down about 12%, Ethereum's down about 20%, and Hype, the native token, is up 40%. Think about those numbers, down 12%, down 20%, up 40%. It's because the volumes have been growing, revenue has been growing. Last year, revenue was just under $1 billion. There's 11 employees. This is a real business, and for the first time, we're seeing real-world assets come on chain.
What kind of adoption do you see from TradFi, from traditional Wall Street onto the Hyperliquid platform right now? Because they have a lot of concerns around know your customer and anti-money laundering, and these are things that don't get solved quickly.
I can't even say TradFi very well. I say traditional finance. I'm
Let's
so traditional finance, so TradFi. I'm trying to work on it, Scarlett. I think as some of the people were saying when you did those clips, the institutional adoption is real. We were an early investor. You had Jeremy Allaire on there. We're an early investor in Circle. That's infrastructure. That's stable coins. That's blockchain. These are things that real bankers or traditional bankers can really understand. And I think today, all major banks, JP Morgan, Bank of America, Bank of New York, State Street, Barclays, they're all investing in blockchain. They all have use cases for blockchain. So one thing we're seeing for sure is the infrastructure is very much adopting blockchain as in my own view, over the next 5 to 10 years, we'll see blockchain emerge as probably the most prevalent infrastructure, really in finance writ large. We
just spoke to Mike Novogratz over at Galaxy Digital, and he regrets not getting into the prediction markets game sooner with investments in the big players. The upgrade to Hyperliquid will allow support for prediction markets. How do you compete with the call sheets and the poly markets out there? What gives you the edge?
So first of all, thank you for asking that. HIP-3, we've been bringing equities on, metals on. HIP-4, we're doing some more changes in the technology so we can bring prediction markets on. Literally in the next couple of weeks, they'll be on Hyperliquid. And I think what we've seen is that Hyperliquid is fast. Hyperliquid has deep liquidity, and Hyperliquid is on-chain. And those things mean that it's going to compete, just as we've seen, 3 weeks of having silver on trade XYZ, it's already competing.
I want to just end on one more digital asset treasury type of question here. It's the ticker PER, that's the ticker for your firm. It's been trading below net asset value. So what's driving that, and under what circumstances would you actually consider selling Hype?
So I don't think it's under net asset value. We have earnings next week, so we'll go through so that we can be more public on what the net asset value is, so people can trade it back and forth. Yeah, I don't think your calculation's right.
Okay, we'll have to go back and look at that. Just one more on that. Is part of the value?
Well, listen, to be fair, I didn't really answer your question. I think we announced publicly a few weeks ago that when it was below net asset value early on, we had approval from the board to buy up to 30 million of shares. I don't think we've reported back on that to the market, but next Tuesday is our first earnings, so we'll be talking about that then.
We'll wait to hear on that. Very briefly, is the value proposition for PER to give access to a wider audience and a wider user base?
So I think, I think there's two value propositions. Value proposition one, and this is really, really critical, Tim, is this is a business creating revenues. The volumes are exploding, and they're exploding in a very substantive way. We're going into new markets. We're actually getting real-world assets through HIP-3, through Unit and Trade XYZ on-chain. We now have a native token, which is USDH. So there's a lot of things that are building this business and increasing revenue. And so the first valuation of Hype is it has all the characteristics of a share buyback, because 97% of the income that's produced within Hyperliquid is used to buy back those tokens. So think of that as very, very similar to a share buyback. That's number one and number two. Now, number three, what we're doing with our DAT, and I think it is different. Everyone says it's different. But we're giving access to a lot of U.S. investors who are not yet approved for perpetual futures to get access to Hype and to Hyperliquid. And I think that's the third value proposition.
Bob, thank you so much. Bob Diamond is Atlas Merchant Capital CEO, but you may also remember him as a former CEO of Barclays. I do want to mention a headline that has just crossed. The Clintons, Bill Clinton and Hillary Clinton, have agreed to testify to Congress over the Jeffrey Epstein ties on February 26th to 27th. And also a separate headline here from Washington. The government funding package has cleared a key House procedural hurdle, perhaps ending the partial government shutdown that we have right now. This is Bloomberg.
We're about halfway through the trading day in New York. I'm Norma Linda. Let's take a look at our midday movers. First up, oil is jumping after an Iranian drone approached an American aircraft carrier in the Arabian Sea and was shot down in, quote, self-defense. That's according to the Pentagon. We're also seeing the S&P 500 hitting a session low, falling more than 1%. Traders are weighing the likelihood of an escalation in tensions between Iran and the United States. And taking a look at precious metals, gold and silver are rebounding today. That's following a rout that sent spot gold tumbling for its worst rout in more than a decade, and spot silver for its worst decline ever. Markets have been reacting to Trump's nomination of Kevin Warsh to be the next Federal Reserve chairman. A risk-on mood returned to wider markets as the U.S. dollar weakened. And lastly, shares of Walt Disney are falling after the entertainment giant said Josh D'Amaro, a 28-year Disney vet, will succeed Bob Iger as CEO of the company. Iger will stay on the board and serve as a senior advisor until his retirement on December 31st. Disney chairman James Gorman shares his thoughts on the future of the company. Take a listen.
This company's trading at 15 times earnings. That's nuts. I mean, honestly, there are very few companies that have this quality of assets, this quality of bones, as I call it, than what we have. There are tremendous moats around the businesses. I'm excited about the prospect of what we can see from Disney over the next several years.
That was Walt Disney Company Chairman James Gorman. Those are your midday movers. Now back to Bloomberg Crypto.
Thanks so much. Well, time now for the Crypto Political Exchange, where we dive deep into the latest crypto policy out of Washington. Just yesterday, lawmakers and lobbyists met for negotiations over the landmark crypto market structure bill, but it ended with no agreement. The issue being considered is whether crypto exchanges and other parties should be able to offer users yield or rewards on stablecoins held on their platforms. Mike Novogratz thinks the bill will be sorted within the next month.
Banks are strong in the lobby, and I do think a deal gets done somewhere in between. But right now, both sides are kind of at a Mexican standoff. Why do I think a deal still gets done? Like, the Republican senators have put a lot of time in this and have a lot at stake, right?
Yeah.
Trump is the quote crypto president. You've got the House and the Senate. You better be able to pass a crypto bill.
That was our conversation, just part of it with Mike Novogratz just a little earlier. We're now joined by Emily Mason. She covers crypto and finance for Bloomberg. Emily, the sticking points that are being hammered out right now, is it realistic to think that they could be hammered out in the next month?
I think the goal with these White House meetings that are now kicking off is that they're settled kind of by the end of February, but it's a really difficult issue to kind of compromise on, like either rewards are allowed or they're not. So that's kind of going to be the big challenge. And there is some timeline pressure before midterms.
How much of the decline in crypto prices is tied to uncertainty to this future of this bill?
I mean, crypto prices, I mean, it's a very sentiment-driven market, so I'm sure there's some overhang there, but I think it's difficult to say definitively.
Certainly doesn't help, though. In terms of what you're looking for to happen next, what's on your radar?
I think we expect there to be like a series of these White House meetings that kind of happen behind closed doors, so people can kind of talk honestly and like without the public eye watching them. Of course, we always try to get in the room, so that's kind of like what we expect, and then hopefully the markup is rescheduled, and then things can kind of move forward from there.
All right, thank you so much, Emily Mason of Bloomberg News. Let's bring in former CFTC Commissioner Summer Mersinger. She is now CEO of Lobbyist, the Blockchain Association. She was at the White House meeting yesterday. Summer, give us your take on what you think realistically the timeline is to get this crypto market structure bill through Congress, given the fact that we have midterm elections coming up.
So the White House was very clear yesterday that on this particular issue, the rewards issue, that we need to have an agreement by the end of the month. That tells me they're on a fast track to get this bill, the Senate banking bill, back into the markup and to the floor. So I think it's realistic that it gets done before the midterms. I do think it might take a few more months to really work out some of these issues, but I'm actually of the opinion that the midterm elections are going to help the momentum because people are going into election and they're very interested in what crypto voters think, and having market structure, I think, would help that narrative.
Is there one political party in your view that's holding things up more than another?
This is one of those times where it's really not. It is a diverse group of specific interests. You've got some bipartisan folks on the kind of intel side who are really worried about illicit finance. Again, that's not Democrat or Republican, it's bipartisan. And then on the yield rewards issue, same thing. It's a bipartisan concern. So it's very bipartisan, at least at this point.
Are people right to be worried about illicit finance?
I think they misunderstand the technology. There's always going to be some form of, you always have to look for that. You always have to worry about it. But I think where they hold someone accountable is where we have some concerns. So, don't hold the developers accountable for the bad actors. And that's really what we've tried to communicate and educate when we're on the Hill talking about this.
Emily was just telling us how she expects another series of White House meetings to keep things moving. When did it become industry's job to negotiate and not lawmakers? Why are they all meeting at the White House and lawmakers are kind of absent from this?
This actually happens from time to time when you can't get, the members can't get the two sides to agree. They'll just put the two sides in a room and say, you guys figure it out. And that's where we are on this issue. We really need to have this dialogue between crypto and the banks. We had a great first meeting yesterday. The conversation has started. And yeah, we're going to continue these conversations to hopefully get a deal before the end of the month.
I'm wondering sort of about what this means for blockchain association spending going into the midterms. The crypto industry was a big spender in 2024. Just give us an idea of how you're thinking about midterm elections from a spending perspective and the messaging that you're going to be sending to voters in ads.
Yeah, we don't do as much of the political spending as some of the outside organizations, but what we look for are the members or, people that we can support who are going to be pro-crypto coming into Congress. So again, doesn't matter if you're a Republican or Democrat, we're going to be supportive of those who are either in Congress that support crypto or not in Congress yet, but could replace someone and have a crypto supporter in a seat.
I wonder, Summer, would it just be cleaner to just ban yield or allow it? I mean, make it an either-or situation as opposed to coming up with exceptions and carving out...
Because that's the sticking point right now.
Yeah, carving out different scenarios.
Well, I think you have to look back to Genius. They did ban yield from the issuers giving yield to anyone. I think this is a little bit different. This is rewards that are provided on transactions, and it's part of the adoption of stablecoins. And so these are, kind of third-party contracts that are going out. So it's not issuer-based, and I think that's where there's some frustration. Is during Genius this was negotiated, and the negotiation was issuers are going to be banned from paying out yield. They could have negotiated third-party providing rewards, but they didn't. And so we're relitigating legislation that hasn't even had a chance to go through rulemaking. It's really frustrating.
Just yes or no, Summer, we only have 10 seconds here. The president, is he delivering everything that he promised when it comes to crypto?
Yes.
All right, going to leave it there.
All right, thanks.
You. Blockchain Association CEO Summer Mersinger, we look forward to having you back on again once this bill does pass. Coming up next, crypto exchanges are being hit hard by low trading volumes with firms like Coinbase, Bullish, and Gemini sinking over the past 3 months. We're going to talk about what's driving this downturn, what it could mean for the exchanges. This is Bloomberg Crypto. All right, let's get you a market check right now with stocks extending their losses to session lows. You can see the S&P 500 down more than 1% on news that the U.S. Navy shot down an Iranian drone headed toward an aircraft carrier in the Arabian Sea. You can see oil prices spiking in terms of the chart movement. In terms of price action, the front contract now up 1.7%. And of course, Bitcoin moving with other risky assets, in this case equities. Bitcoin down 4.4% at 75,000.
Well, that Bitcoin downturn, Scarlett, it's hitting crypto exchanges especially hard, the whole crypto downturn. Trading volumes, the core engine of their business, plunging, dragging share prices down. You can see over the past 3 months, Coinbase and Bullish down more than 40%. Gemini Space Station down close to 60%. Monique Malima has been covering the story. She reports on equities for Bloomberg in Toronto. What exactly is affecting these? Because there's no sort of like FTX moment when it comes to this crypto winter, Monique. Why are we seeing these companies hit so hard?
Yes, like you mentioned, there's no big event that took place. There was no exchange that crashed. What it's largely due to is the fact that crypto prices have been down so much. Bitcoin is down over 30% from its peak in October, and the alternative cryptocurrencies are down even more. And that's really driving a lot of the sentiment in this space. Investors are pulling away from the risk assets, like you mentioned earlier, and they're moving towards more safe havens. And as a result, people are moving away from crypto. And that's really hitting the exchanges because they get the majority of their revenue from transaction fees. So that's making a percent of each transaction someone's making to buy or sell crypto on the platform. So when those prices go down or when people aren't transacting as much, that's going to hit their bottom line. And that's what we've seen. And people are expecting that for the fourth quarter, transaction revenues could have been down as much for volumes of like up to 40%.
And do they see that continuing into the first half of this year? Very quickly, Monique.
Yes, so some are saying that we're kind of in the early days of this downturn in crypto. Some analysts are predicting it could take 6 to 9 months for things to fully recover, and others are saying that until and unless market structure gets passed, we're not going to see any particular catalyst for crypto, so they're going to potentially remain depressed for a while.
All right, Monique Malima, really appreciate it. Thank you so much. Monique Malima, one of our many Bloomberg crypto reporters here doing excellent work. That does it for Bloomberg Crypto this week. Thank you again for joining us on the launch of our 1 hour show. Please join us again next week. This is Bloomberg.